Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 18th of July 2025. The first chart is the US Dollar Index Futures. You can see this market did move higher as we suggested last week. It's attempting to regain its place back in the longer term trading range. It initially pushed higher earlier in the week, and then it came back and it danced around the breakdown line here for a couple of days. And then on Friday, it's just edged its way higher. This is the longer term trading range lows here. And you've got the lows of the range there. It's a little bit of a complex area for this market to negotiate. And it's doing a pretty good job so far. It did so on an increase in volume, almost about average. So it was pretty genuine trading. No anomalies in there. We'll see how it goes. Generally, when a market moves below an important breakdown line like that and then attempts to recover, it fails. It doesn't always fail, but it often fails. So we'll see how it goes. It's making a decent attempt at a recovery at this point. I would still put the odds against it successfully recovering, but it's making a good crack at it anyway. And that's put many of the other associated markets under some pressure this week. So you'll see lots of those markets in consolidation mode, not really pushing higher at all, but trying to hold on to their recent gains. The next chart is the E-mini S&P. This is S&P 500 index futures. And similar to what I just said, this market spent a good part of this week trading below the previous bar's close and within the range of that little up bar there. It's in consolidation mode. It was holding on to the gains made more recently and has done a pretty good job at maintaining those positions. The market remains well placed to push higher when trading conditions improve, but while the US dollar is strengthening, this market is generally a little more conservative in its trading. The next chart is the US Treasury 10-year note futures. They continue to trade within the range of this widespread down bar. They'll likely do so for some time. It really won't be until there's a clear breakout above the range or below the range where we'll see the market begin to trend again. The market pulled back just a little this week and then recovered the lost ground to close back near its highs for the week. It's kind of like a test for supply. Volume was increased but remained below the average. This market's trading sideways. This is copper price futures. They did a pretty good job this week in consolidation mode. The spread or range was quite narrow in here like this. This was an exaggerated spread due to a news announcement, and there was some supply drawn out the top of the bar, which was understandable at the time. And then the markets moved into consolidation mode this week. Done a pretty good job. The spread being quite narrow, considering the previous bar's very wide spread, suggests the market is normalising at that level and attempting to hold on to the recent gains. And it'll probably do so. But there's no danger in there. I do think the market will probably move within a range, something like this for a period. You may get a little shakeout in there before it continues, but with the range being relatively narrow like that, this market is normalising at that price level. The next chart is the gold price futures. And the gold price futures moved sideways pretty much this week within the range of this bar. There may be some cause for some grinding higher there, with the lows being slightly higher each time. But the market moved roughly sideways this week. Volume reduced slightly and was below the average, so supply wasn't a problem. There wasn't selling pressure overwhelming the market or anything like that. market held on to its gains, moved sideways, trading below the previous bar's close for much of the week in there. And when it did pull back, it didn't draw out much supply. That leaves the market well placed for an attempt to push higher when trading conditions are more favourable. Silver price futures. Silver price futures had a slightly exaggerated spread considering the previous two charts we've looked at. That's understandable in this market where there's a lot more retail support in this market, and they tend to scatter their trades around a bit, you might say. But anyway, the market's traded in consolidation mode. There was a brief attempt to continue higher. That wasn't broadly supported across the market, and in response, the market pulled back to consolidate. Then it eventually closed slightly off its lows, showing you that there was buying support in the market. Overall, it's pretty good. Would have been more ideal to see a very narrow spread bar within, say, that range up there, but it's not terrible. It's what you would expect in this market where there's lots of retail involvement and there's sort of trades getting sprayed around a bit. Light crude price futures. Light crude price futures also traded in consolidation mode this week, albeit with a slightly wider spread than may be considered ideal. The market's going to trade within the range of this widespread down bar for some time, I expect, or it may do, and it won't be until there's a break above or below that level that we see the market trend again. I expect this is going to prove to be a controlling bar to some extent, at least in the near term. The market traded a great deal of this week below the previous bar's close in consolidation and absorption mode. Volume was well below the average and reduced slightly over the previous week. So selling pressure wasn't a problem. It wasn't overwhelming. And the market maintained its position pretty comfortably during the week. Into the currencies now. This is the Euro-US dollar currency pair. The market moved back this week with a strength in the US dollar. We suggested last week the market might come back and test this line for strength, which is pretty much what it's done. And it closed back a little off the lows, so there was some buying support emerge from that level. Ongoing strength in the US dollar will probably see this market test this line again. If not, I expect this market will attempt to continue sideways. It always trades the inverse of the US dollar to a large extent. If the US dollar was to fail really badly next week at that important level, this market will probably begin to accelerate higher. So a neutral US dollar will likely see this market trade sideways. Next chart is the British pound currency futures. And they traded with a reduced spread and increased volume, which is always a sign of buying support coming in. Here is the increased volume, slightly narrower spread. We suggested the market would come back and test this level. It didn't quite reach it. Instead, the market found support at the lows of that bar there, which is the lows of this range, if you like, through here. And it's holding on to that level. We closed a little off the week's low, so there was some buying support emerge at that level. The fact that it didn't actually tag that level is actually a sign of strength generally, only a minor sign of strength, but a sign of strength all the same. I would say this market would like to continue higher. It'll go sideways, similar to the euro. It'll go sideways if the US dollar is neutral, and then trade the inverse to some extent in response. This is the Japanese yen currency futures, who, after showing considerable strength previously, are showing a sign of weakness more recently. This is downside follow through and infers weakness in the market. It wasn't able to hold on at this level here. There was no chance of a reversal this week. The tiniest attempt to reverse, and then it failed straight away. Now, spread did narrow and volume increased. It didn't increase substantially, and it's not near the average, but there was a little bit of an increase in volume. To counter that, which suggests buying support came in, but to counter that, here's the lows of that range. This is that range there. And it's actually closed slightly below that level too, so it couldn't hold that, or it couldn't comfortably hold that. This market is acting weaker than showing any strength. The modest amount of strength being shown isn't being reflected in the trading, at least not at this stage. So take that as you will. The next real important level's down here and here. So if it can't hold on at this level, I would expect it to come back and test either just the top of this level or right inside this level for strength. But it's certainly looking weaker than stronger. Next chart is the Aussie dollar currency futures, which came back and tested for supply this week with a slightly awkward, wider spread than would seem ideal in this sort of market. It did see some buying support emerge with the close off the lows, so that was good. Volume was slightly reduced and well below the average, so selling pressure wasn't an issue as price pulled back. But the spread was a little wider than might be considered ideal. It hasn't damaged the position at all, really, at this point. And if you extended this line through, it still did close above that level. That's only a rough level anyway, it's not exact. But all the same, it had a slightly wider spread than maybe considered ideal. It did recover some of that lost ground to close off its low, showing you that buying support did come in, which maintains it in the position you'd like to see. We'll just have to see how it responds next week. It's similar to the other currencies. If the US dollar is going sideways, so is it. We'll just watch and see. But at this point, the Aussie dollar had been showing more strength than I gave it credit for, and it may continue to do so just after the US dollar shows its little bit of strength in response. The Bitcoin futures. Bitcoin futures attempted to continue higher this week and drew out supply. There was the supply. Volume was increased and above the average. Selling pressure emerged this week. And this is the all-time breakout level. This is a really serious level. And it does infer this market's going to come back and test this level for strength, at least to some degree. It may only come back halfway and then take off again. That would be a sign of strength. Or it may come all the way back to this level and even bump around a little bit down here to test the market's strength for the breakout before it does accelerate higher. Or it could fail. That's less likely. But with the supply being drawn out this week on an increase in volume and above average volume, it does suggest the market will pull back to some degree and consolidate, absorb supply, test the market for supply before there's any attempt to really continue higher again. That's the most likely outcome. It could be an absorption bar and just go straight off. That's less likely, really is less likely. Much more likely that the market comes back and tests for supply, at least in that area there. If there's ongoing downside follow through, you'll see the market come all the way back to this level. If there's not, the market may attempt to push higher from there. So you just have to see how the market responds, and then you'll understand how to deal with it as it occurs. Just back to the US dollar index futures quickly before we wrap up. You can see the market has recovered somewhat and is attempting to recover its spot back in this longer term trading range. I doubt that it will be able to do so successfully. It may do so for a week or two before there's a failure. We'll have to wait and see just how the market deals with it. These things don't generally get wrapped up that quickly. Sometimes they do. It could do this. We'll see. But the market is vulnerable where it is right now. It still has to get above this level as well. That's the actual true lows of the range. These are the longer term lows here, which it's made its way above this week. It did make hard work of it during the week, and it really only popped just above late in the week on Thursday and Friday. So it didn't do this easily this week. It did it with some effort. So we'll just see how it goes next week. I'm not expecting it will successfully recover, but I'm not always right either. So thanks for your time. Enjoy your weekend. See you next week. See ya.